Hey you guys, my name is Jeff. Welcome to the channel. If you've been here before, fantastic. Take a seat and stay a while. If you haven't, take a seat and stay a while, because today I want to share with you a very important lesson that I think will help you to become a much better investor. I remember hearing when I was just starting out a quote from Warren Buffett, and he says, when he invests in stock, he doesn't even care if the stock market were closed for 10 years, it wouldn't bother him at all. Why would you not care? To me, it seems really important that you could have the stock market open and then see what the price quotes are and see what your stock is worth. Of course the stock market has to be open. Like, that's the excitement, is you get to see the stock prices go up, and if you buy a good stock, then you get to see, that it's worth more and more and you're getting rich, right? We look at the stock market like every day, and it's sort of something that becomes instinctual, especially because we have apps and websites and all this information out there. And this here is, very, very attractive. This here is like one of those stock apps, and because the quotes are out there every day, it's like you want to make sure that the decisions you made, that things are going up. But with time, I've kind of come to realize the truth about successful investors. And when Warren Buffett says the best investments are when they are business-like, he's talking about an approach to investing that you would understand better, or you will understand, if you own your own business. And this could be a business where you're selling things and taking in money every day and every week, and you have cash flows into the business. Or if you say owned a house or an apartment and you were renting it out, or even if you're just living in a house that you might own, you don't really care from day to day if someone knocked on your door and told you what your house was worth, because you're not planning on selling your house, you're living in it and you're enjoying it, and it's kind of where you and your family, maybe your kids, are growing up, and it serves a purpose for you. It's something, an asset that's useful to you, and you're not selling it, so who cares what the price is? Well, that is the mindset of the successful long-term investor. You shouldn't really care what your stocks are worth from day to day. To be a successful investor, you need to think of stocks as pieces of a business. And when you buy stock in a company, you should do it with the mindset that you wouldn't care if the stock market closed for the next 5 years or 10 years, because you're owning a business that is solid, that's growing, and that's growing its cash flow and its earning. And when you buy this company, you're not worried about what's happening next quarter or next year, and you're not, taking out your phone and trying to make sure that the stock price is here or there. Because if you're buying this stock, for example, I bought stock in Alphabet last month, and it's the first time I'd ever bought stock directly in Alphabet. I own some index funds and ETFs that own that particular stock, but I actually made a decision. I got decisive and I bought a bunch of stock in Alphabet. I'm not going to be selling that stock. Not this year, not next year, not I'm not even thinking about getting rid of it. At some point, I may need to raise some money, I may need to sell it. So the test for whether a stock makes sense for you as an investor is, how would you feel if after you bought the stock, the market were closed for the next 5 years or 10 years and just didn't open up? Would you be happy owning a slice or a piece of that business? I think a lot of people who are newer to investing have grown up in a time when all of this info was readily available on our computers and our phones, and there's this sense that we need to do things and that the price matters from day to day. But I just want to encourage you not to worry about what happens from day to day, because the bouncing around, the ins and outs, the stock market fluctuations, and then people telling you that you need to buy or sell are just a lot of noise. Those stock prices float around all the time, but they're not there to teach you anything. In fact, I would say that it's a real mistake to look too closely at the market and feel that there's something that you can learn from it. And this is something that I feel is a real disservice by a lot of YouTube channels where they're constantly looking at the market and suggesting that there's something that you need to do now because of the market. Time to sell, time to buy, time to freak out. You know, flames and fires and things exploding. The market is not that exciting. It shouldn't be exciting, and investing is best when it's boring. You want to own some stock in some really strong, solid companies that are growing and that are increasing their economic dominance in their sector, that are growing their moats and becoming even stronger. And that is not an exciting process. It often takes, it's measured in years, not in hours or days or months. And so as an investor, I just think you can take a lot of pressure off and finally understand what it means to invest and not care about whether the stock market is open for the next year or 5 or 10. So, you know, this frees you up too. If there's a trip you want to take, if there's something you want to do and you feel like, oh my gosh, what's going to happen to my investments? Well, I probably don't have to tell you this, but there's not a lot of pressure involved. If you do the investing right, you really shouldn't care where the market is open or closed and what happens to your stocks over the next several months or quarters, because in the short term, there's a lot of volatility and it's anyone's guess. The market is a voting machine. The prices go all over the place. But in the long term, the market is a weighing machine. And if you do your research and learn about the companies you're investing in, or you just choose a really sensible ETF or an index fund, then you can just hold that over the long term and it will be weighed. As the economy and as the country and as the stocks in your fund grow, then your ownership will grow at the same time. I'm so glad you stopped by to watch this video. If you liked it, please give it a thumbs up. And if you have not yet subscribed, I hope you will subscribe to this channel. I look forward to seeing you in the next video.